Mr. Vince. I can hear you. I can hear you. Oh, there you go. Mr. Vince.
Can you hear me?
Yeah,
Can you
yes,
hear me?
sir. Yes, sir.
Okay.
My Kappa shirt getting washed. So I just put it in the jacket.
Oh, it's fine. You good? You didn't have to wear it today.
Uh, my school laptop joining because this camera messed up.
What?
I'm gonna join off this laptop instead of
Oh,
this
okay.
laptop right here.
All right.
All right.
Brother Colin.
Hey, good evening. Good evening to everybody. How's everybody doing?
Good.
Good.
I thought I did already get a.
It's the birthday. It's the birthday news.
Yo.
Yo.
Appreciate it.
There you are. How you doing?
I'm good. How are you all?
Doing really good. Doing good.
Good.
Just giving folks time to
I'm
call in.
hot. Yeah, I'm hot. I'm about to fall out.
I was just going to ask you how you was feeling.
Hot. Oh my goodness.
Hey, Sheri.
Hey, Manny.
Hey.
Hey. Manny, I forgot you were a Kappa.
No, you did.
Seriously. Oh my God. Manny, long time no see.
Yeah.
Vince,
Yes.
my old boyfriend.
What? He left that part out.
Uh-oh.
We were very young. We were very young. I think I might have been what, Manny, 8th grade?
Something like that.
I see Antoine.
Hey, pals.
Hey, what's going on?
Hey.
She laughing about.
I heard his son say something. He said,
Yeah, I'm trying to stay in, but not keep these kids out of this.
well, I'm in the same boat. I'm trying to keep my son out of here.
Just another minute. People said they're trying to get in. Just give them a second. Shay, did you have a hard time getting in?
I did at first. It kept asking me for a passcode for a minute, and then I had to log out and log back in.
Okay. There's a couple people saying they have a hard time can't getting in. All right, we're going to go ahead and get started. And as people join, I'll just continue to let them in. Thanks to everybody for calling in. This is our last Zoom Kappa League meeting for the year, but certainly not least, because this is a very important meeting on your finances and your financial stability and your financial wealth. This is definitely one that you don't want to miss. And if you have a pen and paper, make sure that you have that so that you can take notes. Although after the meeting, we'll be available, and hopefully we'll get Ms. Johnson to answer a few questions if they have them in the future, because it's a lot of information and it's a lot to take in, but it's stuff that you definitely need to know. And earlier that you know it and get started in building your financial wealth, the better off that you will be. I'd just like to give a little information on Ms. Johnson. Ms. Johnson graduated from MUW with a degree in project management and communications. Ms. Johnson is the assistant youth director with the youth department at her church. She is the founder of Girlfriends and God, which is a social club charity for domestic abused women. Ms. Johnson sits on the board of DAC's Faith Fight Finish Foundation, and also a youth counselor for kids with behavioral problems within the Starkville-Oktibbeha Consolidated School District. Ms. Johnson has been a stock investor for over 10 years, worked under the most prestigious stockbrokers in Miami, Florida. It is my pleasure to present to some and to introduce to others, Ms. Sheri Johnson. Everybody just give her a hand, and we thank you for being here, and you are most welcome.
Thank you all for having me. Am I able to share my screen?
Yes, you should be able to share your screen.
Okay. Hello, everyone. I'm going to talk to you all briefly about stocks. I don't know how many of you all are familiar with investing in stocks. I've been investing for 10 years now. I started when I moved to Miami, Florida, and I learned how to invest in stocks, what to look for in the stock market. Get out of here, I'm doing something. Sorry, I'm sorry. I learned what to look for in the stock market, when to buy, when to sell. I also learned how to trade stocks. So one of the first things that you want to do when you're investing in the stock market is you want to pick a brokerage. There are a lot of good brokerages, but there are some that are commission free, and that's the ones that you want to go for. You want to go to the commission-free ones because when you cash out, you don't have to worry about paying them any type of commissions or fees. These are totally free. So say you profited $500,000 and you wanted to take that $500,000 and transfer it into your bank account. Well, these that I have listed, you do not have to pay them a fee, where there are others that are going to take a commission. So you may have one where you have to pay them $25,000 of that $500,000 that you're cashing out. TD Ameritrade is the one that I use overall because they list all of the stocks. I use Robinhood as a backup, but TD Ameritrade is mostly where I do most of my trading at and where I do most of my investing at. They're very good. They also have a library that you can go to on YouTube to learn how to do options trading. It tells you about ETFs, stock bonds, and everything. So this is the first one that I would try. It's very simple to download. It's very simple to walk through, to get set up. If you are 18 or older, you can go ahead and get started. If you are under the age of 18, your parent can set you up as an LLC to get you started in trading stocks. So you don't necessarily have to be an adult, but you do have to have an adult to set you up if you are under the age of 18. So everybody got that so far? Thumbs up. Some of the investing tips that I like to give. First, you want to invest for the long term. Second, you have to leave emotions out of it. As with anything that you do in life, there are going to be some ups and downs. So being emotional in the stock market does not work. There are days where the market is completely red. We experienced this past week. The market was entirely red due to the vaccine news, due to them not coming up with the stimulus package agreement, and the entire market went red. To be honest, I lost $500 in the market last week. There are days that you're going to lose that, but you can also make that back up. And the last tip is don't time the market. You can't say, oh, well, let me invest $500 today so that I can profit $100,000 by Friday. You don't want to time the market. The market is basically just like a football game. You don't know if you're going to win or lose. Sometimes you may be up, and then later on in that game, you're going to be down. It's not something that you're going to get up early in the morning and then you see, oh, I'm green today. That means I'm going to finish out the market good. No, sometimes around about 11 o'clock, which is the halfway mark, the market goes red. And that is, like I say, the news plays a big factor in that. So you can't time the market. So those are three of the things people. Make sure that you're investing for the long term, leave your emotions out of it, and don't time the market. Next, you want to understand what a stock is. For those of you that don't know, a stock is basically a holding. You're taking it in a trade. I mean, it's a share ownership of a company. So basically what you're doing is, hold on, you guys. Okay. So basically what you're doing is you're buying into a company that gives you the right to become a partial owner of the company. And with that, you get to vote. So that is what a stock is. The stock market is one of the greatest opportunity machines that was ever created. You could do this with your regular job. You could do this as a full-time job, or you can do this just as a hobby. Everyone should have access to the stock market. It's not just for the rich and the privileged. This is why I decided to do the free training. I'm also doing it for the general public too, training them on how to invest in the stock market, because there's a lot of money out there that people don't even realize for the stock market. You can invest in stock holdings for years, and some of them give you dividends. You can also trade stocks, day trades, swing trades, or short term them. With the day trade, is basically you're jumping in a stock trade just for that day and you're going to cash out at the end of the day. A swing trade, it may be for a day or two, it may be for a week or two. And when you short them, it's basically saying that the stock is going to go down instead of up. So basically you're shorting a stock saying that, hey, this is going to go down. So I'm going to jump in this, but I'm going to sell it because I know that it's going down. And then there are option trades, which is my favorite. These are what you do, buy or sell calls or puts with an expiration date. With these, the reason why I love them is because it's quick profit versus where you're buying shares in a stock, you're holding those for multiple years. Options trade, you can jump in, like right now, I can tell you one that I'm in. I'm in Pfizer. For those of you that may not know, Pfizer is one of the vaccines that was just approved by the USA that they're actually having on trucks right now. So my Pfizer trade that I'm in is set to go to December 24th. And right now I have 3 contracts, which is 300 shares. And I know that sounds foreign language, but basically it's as if you were buying a stock, but instead you're just trading these stocks. So you're paying a lesser price. So for those 300 contracts, I only paid $138. Well, if those continue to go up as we project they will, just because it is the vaccine for the COVID-19, then those shares can profit $38,000 by December 24th. So it's like I say, it's a lot of money in the stock market. We don't know a lot about it just because no one has never taken out the time to show us how to do it. No one has taken out the time to even let us know, hey, you can get this money. You don't have to have a lot of money to even invest in the stock market. So when you're getting started, try the different trading and investing strategies and see what works best for you. Like options trade worked for me, but it may not work for you. You may like holding long-term stocks and going, 2-3 years to see how you profit instead of going, which a risky trade, option trade. Options trade are very risky because at any point, like I said, the market can go red. And instead of me losing the $138 that I put in, I may lose $400 or $500 on it. But I like it, and it's a risk, and I like taking risks. So the differences between long-term investing is that long-term investing is anything between 90 days to 12 months or more. Investing in value, you have fundamental analysis, and there is very limited risk management. Short-term investing is anything from 5 minutes to 90 days, which is what the options trade is, and which is shorting trades are, and day trading and swing trading. You're investing in price with analysis, and there is a lot of volatility, meaning that the market moves pretty fast with those trades. So now you want to understand what type of stocks you have. You have companies, they issue stocks because they need to raise money. Companies can either borrow it from somebody or they can raise it by selling part of the company, which is what they do when you buy a share into the company. So say you're investing in Apple and you buy 100 shares. Well, they're raising money by selling you 100 shares of the company. And by issuing that stock to you, the company does not have to pay the money back or make any interest payments. What do you get out of the deal? Well, you get the hope that the share will be worth more in the future, which we know Apple will, because Apple has gadgets and things that comes out probably twice, 3 times a year. Just like now they have the iPhone 12, 12 Pro Max. All of those have just come out. They got the new AirPod, but they're the wireless headphone. Those have just come out, which has raised the Apple stock. Disney is another one that's going up. You know, people are going to go to Disney World regardless, unless they completely shut it down with COVID. But right now we know that Disney's going to go up. The airline stocks are good because right now they're down, but they're about to increase in value just because they are going to have to fly a lot of the vaccines that are coming in from Canada and from other countries. But if the company does not do well, then you may lose money that you've invested, which that's why is never invest more than you're willing to lose. So if you're not willing to lose $500, don't invest $500. Just invest what you are willing to lose. And when I say that, it doesn't necessarily mean that you will lose money, but if perhaps you do lose money, you don't want to invest more than what you're willing to lose. So if you invest $25 every week, starting at the beginning of 2021, you'll have $1,430 a year later. That is only if it is a return of 10%. 5 years, you may have $8,730. 10 years, $22,790. 30 years, $235,000. 50 years, $1,664,000. That is just investing $25 a week, and those are in small stocks, and I call those penny stocks. But if you invest in stocks that are big time companies like Amazon, Netflix, things like that, well, that 1 year may be $22,000 or even $235,000. And I'm going to show you all this video from one of my stock coaches. Can you all see this? Can you all see this right here?
Not yet. No.
Okay, hold on. Okay, can you all see that now?
Yes.
Okay, so.
Can't really hear.
Okay. So as you all can see, he started that one particular account in 2019. Keep in mind, the stock market crashed in March when the pandemic started. It wasn't a complete crash, but it crashed. Everything went down completely because of the shutdown. And even with that, and he did a few options trades, want to say starting back in July, he started doing a few options trades. And now that one particular account is a value of $19,252. And it's not even, I wouldn't even say an entire year, just because he stopped trading a few months and just kind of focused on trying to read the market. But that account jumped from $2,800 to $19,252. So that's what I'm saying. Like, you can make money in the market without even investing a lot of money in the market. So you have several types of stocks. You have what is called the blue chip stock. And the reason why I'm telling you all this is because you don't want to put all of your money into one particular type of stock. You want to balance your portfolio. So if you're investing $100 into the stock market, you want to invest your portfolio with at least 20% in probably 5 different types of stocks. So by blue chip, those are your big time companies. Apple, Amazon, Disney, Nike, Microsoft, Netflix is big time right now. You want to invest that 20% in the blue chip company. Then you have what is called an income company. These are stocks that pay a consistent and growth dividend in good and bad times. Some of those are like Verizon, Apple, not Apple, I'm sorry, Verizon, AT&T, any gas stock like ExxonMobil, those are good. You got tobacco companies like Altria, that is a good income stock. And like I say, these pay consistently. They may pay you every 3 months a growing dividend just for even being in that stock. Next, you have what is called defensive stocks. And these are stocks that provide a constant dividend and maintain current earnings regardless of the market condition. Those are things like UPS, FedEx, Deere Company, which, you know, manufactures tractors and everything. So those types of companies, and which you can do your research, you can type it in on Google and find out what type of defensive stocks there are. You can type in what type of income stocks, blue chip stocks, etc. The growth stocks are stocks that are anticipated to grow at a rate above the average. And right now, the best growth stock is Walmart. We know that during this pandemic, Walmart is not going to close. We know that they're steadily going to get trucks in because they have to stock. They're considered an essential business. Kroger would be a growth stock right now. What's the name of the place? Not Best Buy, Sam's Club is a good one right now. That is a good growth stock. We know that those essential businesses are not going to close. Then you have last, which is your cyclical stocks. Those are affected by changes in the overall economy. Now, with those, I wouldn't invest a whole lot in those because they, like they say, they're changed by the economy. These are things that restaurants, airlines, hotel chains, high-end clothing retailers, automobile manufacturers and stuff. Those right now are most of the ones that are down. So investing in those while they're down, you would need to do your research to make sure that it is good to invest. I would stay away from any hotel chains right now, because with the hotel chains, although they will still have people stay there, they're not going to be 100% at capacity. And I say that because I managed Hilton Garden Inn for 5 years. So anytime that there is a change in the economy, although we may have people stay there, we weren't 100%, so we weren't making enough money to where, you know, business was booming. We made enough to get by, but after you take away what you have to do with paying out bills and stuff, the electricity, replenishing supplies in the hotel and everything, it takes away from what you really need to be in a good profit. So I would stay away from the hotel chains if you decide to invest right now. But airline, any travel, cruise lines, those are good to invest in right now, because we know that come January, those things are going to go back to booming unless there is a big wave with the COVID-19 and they decide, well, you know, we're going to shut down things. So there are two types of stocks that you really have to kind of pay attention to. And these are basically what they divide the stocks into. You have either a common stock or a preferred stock. A common stock is the most common form of a stock. You get 1 vote per share. So if you invest 100 shares into Nike, they will send you an email letting you know that they have a meeting and that they're going to have a vote on something. Well, you get 100 votes in there if you have 100 shares. So however many shares you have in a company is how many votes you get to vote in that company. Yes, you do have the right to vote with them. That's even when Nike's coming out with a new shoe and they may say, well, we need all our board members to come aboard and vote. Well, you get an email saying, hey, we're having a meeting. We have a new product that's coming out. We want your opinion. So if I have 1,000 shares in Nike, well, guess what? I get 1,000 votes for that new product that's coming out. I can either vote 1,000 no's or 1,000 yes or 1,000 maybe. But the dividends in that are not guaranteed because those are stocks that are based off of profits. Preferred stock is what is, they have fixed dividends. They may or may not include voting. It just depends on which company you vote in. Like Cheesecake Factory, this called a preferred stock. I don't get to vote in the Cheesecake Factory, but I do get their quarterly reports. I get their statements, their financial statements and everything, but I don't have a right to vote when they have a meeting. They will alert me to let me know that they are having a meeting, and then I'll get something from the meetings telling me what they went over, but that's about it. So to understand stocks, you have to understand that stocks have what is called a ticker symbol. These are just symbols that you use when you're trying to buy a stock or trade a stock. So like, for instance, Microsoft, that ticker symbol is MSFT. You may have like Pfizer, which is PFE. You also have like Hilton Garden Inn, which is, well, Hilton Grand Vacations, which is HGV. You have Moderna, which is mRNA, just different initials. So pay attention to those when you're trying to buy stocks, because sometimes you may think that a stock symbol may be for a certain particular company and it won't be. So make sure that you're paying attention to that. And last, you have what is called the IPO, which is the initial public offering. This is the first time a stock is sold to the public or sold in the primary market, which the primary market is just basically the stock market. So the market and indices. Indices may sound like foreign language to you all, but let me tell you about indices. Dow Jones, S&P 500, NASDAQ, those are good money makers. Dow Jones carries 30 of the most significant stocks in the stock market. They're also some of the most expensive ones. S&P 500 is 500 of the largest companies on the US stock market. NASDAQ carry all stocks on the NASDAQ. You have two markets, which is the primary market, which is where stocks are created. And then you have the secondary market, which is where investors trade previously issued stocks. So buying stocks, you're doing it on the primary market. Trading options, you're doing it on the secondary market. So when to determine when to buy. So the first thing you want to do is add the stock to your watch list. Make sure that you watch the stock for at least 3 to 5 consecutive days before buying. Okay, so make sure that you are watching the stock at least 3 to 5 consecutive days before you're buying, unless the research of the company shows to buy immediately. So if the stock goes up the first day and then goes down the second day and then consistently up for 2 days after that, you can buy. But if the stock is consistently going down several days after only going up 1 day, then you will want to wait to buy. And I say that because if you buy that stock that first day just because it went up and then it goes down the next 3 days, guess what? You lost money. Just that quick. So you always want to make sure that it is consecutively going up. Even if it goes up one day, goes down one day, goes up one day, goes down the next day, and then go back up. That is okay to buy. But if you see that it's gone down 2 or 3 days in a row, don't get in it. It is not a good stock to buy. You're definitely going to lose money. And I don't want you to be like, well, dang, I should have never got in that stock. You want to make sure that it's consistently going up at least 2, 3 of those days. And you want to make sure that it hasn't gone down at least 3 of those days. Okay, so now stocks, how they move in the stock market. Stocks increase in price when there are more buyers than sellers. They decrease in price when there are more sellers than buyers. So the stock market adjusts to new information. That is one of the main things that makes stocks wiggle around. They move based on the laws of supply and demand. If a lot of people want to buy a stock, then the share price will move up. So just like the vaccines, a lot of people are buying those, so they're moving up. But say a large investor that has invested over $5 million in there decides that he wants to come in and dump his stock and say, hey, I don't want to invest in this stock anymore. I'm just going to dump my $5 million. I'm selling them. Then that price of that stock is going to move down because that large investor is no longer in that stock. So like I say, it's an up and down market. Then you have what is called a reversal. A reverse can happen within the stock market at any time. And I hate to tell you, I hate to say this, but right now, because of Donald Trump, every time Trump gets on Twitter and tweets, the stock market goes red. So does what we call foreign exchange trading, which we trade with other companies, other countries. But anytime Donald Trump gets on the news and open his mouth, anytime he tweets, everything goes red, because at that point, the bank considers that a risk. They don't want to lose money because they feel that whatever is going to come out of his mouth is going to cause the markets to go against them, and then they lose money. So that is when a reversal happens. Another time the reversals happen, a company may report a much higher expected earning. So say they may say that they've made $100,000. So the next day it gaps up. Well, if they go back and correct it and say, oh, my bad, we didn't make $100,000, we made $75,000, and it falls down sharply the next day, then that's another reversal. That's when another reversal happens. It goes back red because the company reported incorrect earnings. So be careful when buying stocks like this when it is down, because if you buy stocks when they're down and then they turn around the next day and say, this is our earning, and then they go back left the other day because they made the mistake of reporting an incorrect earning, then you lose money. So you have to be careful when buying stocks that are down. Unless you know that that stock is gonna have the potential to move up, don't ever try to buy a stock at its lowest point. Trying to see which one was a good one that we got in. We learned a lesson about it last week. Tilray. We learned our lesson with Tilray with the marijuana. The cannabis industry is a good industry to invest in, but it's not one that you want to buy when it's completely down either, because we bought down last week and it steadily moved down. So we went negative. We steadily lost money. Versus where if you buy when it's up, say $10 or more, if it goes down a little bit, you're not losing as much. You're not going in the negative. But if you're buying when it's very low and it goes lower than that, then you're losing money. So there are two things that we call the market. We call it a bearish market and a bullish market. Well, the bearish market is used when we describe an investor who believes that the market is headed downwards. So when you're wanting to sell, that is called bearish. So think of Chicago Bears for selling. Think of Chicago Bulls for buying. The market is either bearish, which is in a selling mode, or is bullish, which is in a buying mode. So those are two ways to look at the market. And then with the bullish mode, you kind of want to make sure that pay attention to the 52-week lows and highs. If that stock has hit the 52-week lows consecutively, then you don't want to get in that because it's going to stay bearish. You want to stay away from it. But if it has been kind of fluctuating up and down, then it is okay to get in that one. But if you see that it has hit that 52 highs, which it'll show you Let's see if I can pull it up. It will show you, if you click on that actual stock, it'll tell you what the lows and the highs are. Give me just a minute.
You see the question?
Let me see. What is the question? I can't see it.
What are your thoughts on apps like Robinhood for stock trading?
What is my thoughts on? Hold on, let me see if I can see
On
it.
Robinhood for stock trading?
I like Robinhood. Robinhood is actually a good one to actually to use. Like I say, they're commission free. The only thing that I would say about Robinhood, the downside to that is there are a lot of stocks that they don't carry. So sometimes you may see a stock that you want to invest in, or you may even get an investing tip from someone that says, hey, this is a good stock. We see that the market is going to move on this one. And you may go to Robinhood and they may not have it, which is why I have two platforms. I have Robinhood and Ameritrade, because what I can't find on one, I can find on the other.
Now on Ameritrade, because I have Ameritrade just for everyone else, there is a cost per trade, and I think you can already show us that.
Yes.
Okay.
So here's Ameritrade. I hope it's not too foreign for you all, but on Ameritrade, they don't have any commission, but they do have what is called a margin fee. It just, well, I take that back. It depends on what you're trying to do. Now, if you're just trying to buy stocks, there is no fee. But if you're set up for stocks, bonds, ETFs, options trade, then yeah, they are going to charge a little bit of a fee. It's not a lot, but there is a small fee. But they are commission free.
Now, how much does it cost to get started? Now, how much? I mean, how much do I have to put in this Ameritrade account just to get me going?
You can put as small as $1 in there, and you can buy penny stocks. There are some actual marijuana penny stocks that are available now. There's this one, the HALB, which we had a good day last week, and then it kind of went down. But to get a good start, I would put $100 in there, and I would divide that into those 5 different stock companies that I called out. I would put 20% into each stock company and start from there. Research some of the companies that doesn't cost a lot to get in. I can tell you now, like Netflix is super expensive to get in right now. Like right now, Netflix is $503.22. So if you wanted to even buy one share of that, it's $503.22 just to buy one share of Netflix. So you basically have to kind of play around with what companies you want to get in. Like Apple right now, Apple is, it closed at $122.41, which this is kind of low for Apple per se, but Apple had a pretty good week because of a lot of the news. But to get an Apple now, it's $122.41 per share. Now, come tomorrow morning, this was what it was at the close of market on Friday. Come tomorrow morning, that may jump or that may drop. But if you wanted to get an Apple right now and do, because the market is closed, you can do what is called a GTC. which is called good till canceled. You can, it's after market hours and you wanted to get in that, then you could, and it'll be $122.41 per share. But like, Prone is one of the marijuana stocks. Prone
I
is
have another question. Can you go back to that Apple, to that
Apple.
one? Yeah, real quick. I just want to point something out.
Okay.
Everyone, look at the 52-week range, and where it says, and look where it was at $53.15,
15 cents.
and then
Yeah.
that range all the way up to $137.98. So if you had gotten in at $53, your gain would be how much? What, about triple?
Yes, it would have.
Almost triple?
Say if you had got in at 53.15 and say you just bought 5 shares, you would have only spent $265.75 for those 5 shares. But look at what it would have been now. You would have been at $689.90
Right.
just for 5 shares of Apple.
Now, someone asked in the chat, I bought Apple when it split. What was the advantage of that?
How many shares did you have?
I was going back on my Robinhood app trying to see, and I can't remember. I hadn't done my due diligence in studying. I had some extra income, if there's such a thing, and
with the Apple split, basically if you had 1 share in Apple, you gained 4. It was a 4-to-1 split. So same thing that was with Tesla. Tesla did a 5-to-1 split. If you had 1 share in Tesla, you gained 5 shares in Tesla back then.
Right.
It was good at that point to profit off of that, but I ended up selling my shares just because I knew that Apple was going back down and I didn't want to take the risk of losing the money that I had just made off of the split with the merger. So I took my money and I ran. And that's the other thing too. You have to determine when you want to take the money out. You don't have to necessarily keep it for 2 or 3 years. You can get up to a comfortable spot and say, hey, I'm going to take some out and I'll reinvest. So basically it's up to you as to when you want to. I always tell anybody that I train, don't be greedy. Sometimes we want to say, well, let me hold this for 5 years and I'm gonna see. So take half of it and move that into your bank account and leave the other half in there and see how far it goes for 5 years. But don't leave all of that in there, because at any point, if the market goes red, you may lose everything that you've gained.
yeah, I'm getting emails from Robinhood telling me that my interest, I have to go back and look and tell you exactly what it says. But basically it's telling me that I made money, but it's only like cents.
Yeah, those are just the interest that you get because you're holding stocks in there. So they do give interest every single month. It may not be nothing but 2 or 3 cents. And those are what they're calling the little small dividends. They do add up eventually, but the more shares you have, the more your dividends are from Robinhood.
Right. So it's telling me, cha-ching, your monthly interest payment is here.
And what is it, about 2 cents?
It wasn't even 10 cents. It was, your monthly interest payment is 0.1 cent.
Yeah, those are the little small dividends for you holding stocks in there. And like I say, the more shares you have, the more that'll go up. Those little dividends are just dividends that you're going to be collecting over years. They don't really add up quick as it does with you holding shares and your stock actually rising, but they're just little extra added bonuses, as they call it. I don't normally do anything with my dividends. I just let them collect.
Okay.
Adds a few cents on it. It's not nothing major. You can at any time, it's just gonna send you that. Sometimes it may be 2 cents, sometimes it may be 5, sometimes it may be 7 cents. It just depends on what stocks you're in. If you're in higher stocks, the dividends are a little bit higher. And those are what, when I was talking, I said the income stocks, and they give you like a dividend every so many months or something. That's what Robinhood does. They're just like the income stocks that give you a little dividend. Same thing if you're using Stash, which I wouldn't recommend Stash. So anybody that has downloaded Stash to do stocks, I don't recommend it at all. Stash is not good.
Kelvin.
Okay. One question, and I'll turn it back over to Brother Vince Davis. Sheri,
Mhm.
going alone is always difficult, but when you team up with people, you seem to get a lot farther. Do you all have a team? I hear you saying we. How do
We do.
are the team we open for additional members?
Yes, and we would love to have
Question.
one that is that's wanting to join us. What we do is we get together, we give out our stock ideas, we trade stock ideas and stuff. There may be I'll say one of my cousins, he's a truck driver. He studies stocks on the road, but he mostly studies with the electric car with Tesla and all of that. He does that side of the stock. I do airlines, the hotels, Dow Jones, S&P 500, marijuana stocks. I do all of those. There are a lot of us that are in the group and we share stock ideas. We answer stock questions where some of us may not be advanced in. Like take me, for instance, I'm not that experienced with the bonds part, but I'm learning from other people within the group. Most of mine is just the ETFs, the stocks, the trades. I do trading. I trade day and night, Sunday through Friday, I trade. So I'm more experienced with that side. And like I say, I'm not that experienced with the bonds. So what we do is we all get together and we trade ideas. We answer questions for each other. We help each other when we are stuck on something, or we may not even be sure what a certain stock is, because you have some stocks that are coming out now and I'll be like, well, what do they do? And there's somebody else in the group that knows, that has researched it, and they'll say, well, this is what's going to happen right now. We got these charge and port stations that are coming out. Biden said 550,000 of them are getting built in 2021. So those charging stations for those electric cars and everything else are going to be some booming stocks in 2021. So if you'll give Vince your email address and everything, I can send you to join in the group.
You have my cell phone number. This is
Who am I
Kelvin.
talking to?
Kelvin Gibson.
Ah, hi. Yes, I do. I'll send you the information. I can't see it's not showing me everything on here, so.
I have my video off. I don't
Okay.
have my Kappa on. I got my Stiller stuff on tonight.
Okay, but yeah, we're welcome to take anybody in the group. Like I say, it's a learning group for us. And we share stock ideas. We share trades, even when we're doing options trades. Like right now, we just traded VNOM, and it's not set to expire until June. So it's still time for anyone that wants to jump in an options trade to get in. But we do all of that together. We try to make it to where we're a team and where we're helping each other and where we're all making money, and we're not in competition with each other. We don't care how many people got how many stocks. And that's another thing. You can't compete with somebody else, because versus where Vince may be able to buy 1,000 shares in a company, you may not be able to buy nothing but 50 shares in a company. So you can't compare your money and you can't compete. But what you can do is help each other. Like, hey man, this is what you can do to get up. This is what you can trade in right here. Or this is the stock that you need to buy to get up, or whatever. Or this stock is going to be up in 3 months. So things like that, we are taking into precautions. And I will tell anyone, the cannabis industry, any of the cannabis stocks are going to be very good to invest in, because Joe Biden did mention that if he became president, that he was decriminalizing marijuana. Well, they voted on it, and I think it passed the House, and now it has to pass the Senate. So once it passed the Senate, guess what? Every last one of those marijuana stocks, even the penny stock, they're going to skyrocket. They are $7, $8, $9. I think a couple of them are $23 a share right now. But I'll give it to February, those stocks are probably going to be $100 and $200 a share.
Question. So with the group, is it possible for like the Kappa League, like 4 or 5 of them getting together and coming up with a group or a group name, and then as an investment group and maybe put $20 a month in it and then start looking at stocks that way?
Yes.
Is that possible?
I think that's a great idea. And I think that's a great way for them to get started. It's never too early and it's never too late. I actually have my son is 6 years old. I have him set up in an LLC so that he can start growing stocks. I'm learning him as he grows older. He's understanding a little bit, but not so much. But by the time he gets 15 years old, I expect for him to be an expert in stocks.
Brother Gibson, just wanted to just kind of give you a scenario with the company that I work for with PACCAR. As far as dividends, our company gives dividends on stocks you hold at least 4 times a year. And one of those dividends is usually about $2.50 a share.
Wow.
So for instance, if I've got 3,000 shares, I'm gonna get over $6,000 in dividends, which I can have go straight to my account, or I can reinvest that amount. And that's how that works at PACCAR.
Wow.
That's awesome. That's awesome, Brother Vince.
That is. I need to get on that PACCAR.
That's some incentive just to get on. Now, wait a minute. Are they doing that for everybody, or are they doing it for
anybody that is invested in their stock in PACCAR? If you're in PACCAR and you're invested, you will get a dividend.
Wow, that is awesome.
That's amazing.
That is very awesome.
One thing that piqued my interest, I work for the state, so I'm in PERS retirement system, but we do have a deferred comp plan where you can go in and basically put money into a whole nother system to supplement your retirement. But it's all about investments. They go in and invest the money for you. So I was doing like $200 a month, allowing our deferred company up in somewhere up north that would take it and invest it for me. But just talking to friends, kind of want to spread my wings a little bit, learn about the app Robinhood, and jumped in, but I hadn't done enough training to really take advantage of it.
It's real simple, to be honest, especially on Robinhood. Robinhood basically gives you step-by-step with buying, even with selling. It even gives you step-by-step with trading options. If you wanted to trade the stocks, I would tell anyone the best app to trade the options on is Robinhood, because it's pretty much self-explanatory versus what on Ameritrade, you have to do think and swim. There's a lot of more steps to Ameritrade than it is to Robinhood. It profits the same, but Robinhood is just more simpler. And I would recommend that for any of the teenagers that are planning on getting into stocks. I would say go to Robinhood for that, just because of the fact that it's kind of step by step. You won't get confused on what you're doing. I tried to explain Ameritrade to someone and they kind of said that they were a little lost, which Ameritrade to me is simple, but I've also been trading stocks and buying stocks for a long time. But even like with this, showing you now Aurora Cannabis, which is one of the lead weed stocks, you can easily click buy and you can type in how many shares you want. Down here where it says action, you're buying the quantity. I can say I wanted to buy 40 limit. And the reason why I do the limit is because with the limit, you get to set a price that you want to buy it at, versus where if you want to do it at market, you're automatically buying whatever the market price is. And then the time in force, I always try to do either day or mid on close, but that's only if I was going to trade an option, and then it may do it or may not. Okay, so if I wanted to buy 40 shares of ACB right now, my total would be $396.40. So just say it's $9.91 right now for that stock. So just say that that stock goes up to $200 in February and you got 40 shares, that's $8,000 in February. So, I mean, it's just that simple. Questions? Okay. I don't know why I can't see the questions.
Oh, let me see if there are any. No, no questions yet.
Okay. No questions? So this is what you were asking. How much money do you need to get started? With day trading, they tell you that 25,000. I say 1,000. You can day trade with $1,000. You're not gonna go big. With investing, you can begin with as little as $1. But I say $100 just because you want to kind of be diversified in your portfolio. You want to have more than just one stock in your portfolio. You want to kind of have it evened out a little bit to where if one stock doesn't do well, you got 4 other stocks that may. With options trading, I would say it says 5,000, but I would say 1,000 with that either. And with swing trade, $1,000 with that too. So that way you got a little bit more room to kind of get a little bit more shares, because with option trading, you're doing contracts. So contracts are a little different from shares. One contract equals 100 shares. So if you do 2 contracts, that's 200 shares. So you're gonna need a little bit more money with options trading versus where if I was just going to buy a $2 stock with 100 shares. So this is what I was talking about earlier, 5 huge mistakes that beginners make. Don't buy stocks that are hitting 52-week lows. You don't want to do that. If it's hitting that 52-week low, it's for a reason. Either that company is about to go out of business or the economy is affecting that company. Don't trade penny stocks unless you are experienced. Reason being is because penny stocks can sometimes go to $0. And if you're not an experienced trader, you may panic and decide that you want to sell your penny stocks, which you won't profit anything from off of it because it's hit $0, versus where you may not, if you're experienced, you'll understand, well, give the market time. Don't short your stocks, meaning if you've done your research and that company says it's gonna take 2 years for that stock to move and you decide you wanna get in it, don't pull out of that stock within 6 months because you haven't given it time to actually grow. Don't trade on margin. This is when the brokerage company kind of loans you money to trade. They normally you have to have, I think, about $5,000, and then they'll add another $5,000 for you to trade. Well, the thing with that is if you trade on that margin because they've given you an extra $5,000 and you go big in investing and you lose your $5,000, then you're negative $5,000 plus the $5,000 that they gave you on margin. Don't trade other people's ideas. And I say this because I may tell you, hey, buy American Airlines. But that's just off of my research and off of my goals. I may have a short-term goal on it versus where American Airlines may be a long-term goal. So do your research before you take anybody's trade ideas. Even if they call out a trade, still look up that company and see what that company says, see what the news says about that company. If there's gonna be anything with the economy that's gonna affect it, just make sure that you're doing your own research. And 5 things that beginners need to know with the stock market: reaction to the news is always more important than the news itself. Pay attention to what I just said. Reaction to the news is always more important than the news itself. News plays a part in the stock market, a whole lot, where they may say the vaccine just got approved in Canada. Well, it may react negatively in the stock market because we're in the United States. So it's just reacting at that time until the United States actually approves it, which just happened this past weekend. reaction to an earnings report is always more important than the earnings report itself. And I went over that with you all, that the company may report that the earning was $100,000 and then turn around the next day and say, oh, we made a mistake, it's only 75,000. So kind of pay attention to those. That's why I say research the company. Buy the strongest stocks that keep moving up. You want to kind of stay with the stocks that are moving up on the market. Disney, I think they say it was steadily moving up now. Tesla is gonna move up. Tesla's doing a merger. Look into gambling stocks. There is about to be a merger with the gambling stocks. So look into that. And then listen to the market. Just because you need to make money today doesn't mean the opportunity will automatically be available. You may wake up and say, hey, dang, I need $200 today. Let me jump up in the stock market. Don't do that. Research before you do it. Look at the market, see how the market's reacting, because you may jump in there and lose what you're trying to get. So you don't want to do that. You want to make sure that you're paying attention to the market so that you are actually going with the market and not against the market. And as always, like I tell everyone, and I said it earlier, leave your emotions out of it. Just because the market goes red doesn't mean that it's a bad thing. It goes up and down. That's just like y'all grades. They go up and down for some of y'all. Oh, I know some of y'all didn't have me as y'all substitute teacher, so up and down. Yeah, some of y'all grades go up and down. So that's just like the stock market. It goes up and down. You're not going to always have all A's, and the stock market's not going to always be green. You're going to have some days where some of the stocks you're in are red. The next day, it may be a gap in the market and you may jump up. And I'll tell you a good one. We were in HALB, which is a technology stock. And the stock has been negative for the past 2 weeks. And all of a sudden, we went from, I think it was 20 cents a share to 53 cents a share on Thursday. Just that quick. We jumped just that quick.
Appreciate that, because I'm in on HLB, so.
Yes, I am. I'm still trying to hold mine because it said hold it for at least 9 months.
Yeah, I'm holding.
I'm trying to hold it because I bought a lot of shares in that one, and it was cheap though.
Yes.
I got a lot of them real cheap. So, and those penny stocks are real good too if you do your research on them. If you can get 1,200 shares for $20 and you can profit $900 to $1,000 just off of that from what you put in there. So, any questions? No questions? And for those of you that like to take a risk, I'm willing to teach y'all FOREX one-on-one. That is different from the stock market. With the FOREX, it's a foreign exchange, and we change foreign currencies with Mexico, Japan, Great Britain, Canada, Europe, France. We trade those. So, you know, if you travel to another country, you have to have their currency to even do any type of business in there. So with FOREX, we're trading US dollars for foreign currency to people that may be trying to buy foreign currency and stuff. And I post my profits on Facebook sometimes, but FOREX currency is quick profit and it's quicker than the stock market. So and you don't have to be 18 to do that. You can be, I think the minimum age is 15. So you can be 15 or older to do FOREX. And there have been weeks where I've made $4,000 or $5,000 in 1 week just from trading foreign currency. And we normally trade with the news so that we don't lose money.
We're gonna talk about that one.
Yeah, you need to get on that one. You need to get on that one for real. It's real good. And like I say, it's 15 and older. You can join for as little as $50 in your account. And you can grow that $50 to $1,000 within 3-4 days. Yeah, some of y'all like to hustle. I know. Some of y'all like to hustle. So instead of shooting dice or anything, you can take that little money, put it into the FOREX, and trade. And those are commission fee free. You can trade Bitcoin. You can trade Ripple, Ethereum, gas, oil. You can trade any of that on the foreign currency and make money. So for those of you that are having a hard time getting a job right now because of the pandemic, y'all let me know. I set y'all over FOREX. So that's all I got, unless they got questions.
So I wanted to kind of share some information on a little more information on as far as PACCAR, because just for the people on the line or on the call, the stock market has been really good to me. It's been a lot of times my bread and butter, and I've been in the stock market for quite some time. And the reason I got into it was uh, from a company stand base, first of all, and now with PACCAR, of course, everybody that comes in, I kind of try to explain to them how it works, because I think a lot of us miss out a lot in the stock market and how it works and how to get that extra money, or even free money, that a company will give you, just for participating and purchasing their stock. I want to give you an example, and it's called a 401k. And a lot of you guys, a lot of the adults that are on here, and some of the kids are starting to get jobs, and they'll say, do you want to participate in the 401k? And because you don't know anything about it, you probably say no. And they say they'll take, so in PACCAR, and I try to tell everybody, hey, if they have a 401k in any company, the first thing you want to do is get in it as soon as you can. For example, with PACCAR, they do a 5% match on anything on what you put into it. So for instance, if you're making $1,000 a month, and you contribute, say you want to contribute 5%. You guys know what 5% of $1,000 is? You know what 10% of 1,000? 10% of $1,000 is $100. So 5% would be half of that. It would be $50. That $50 is pre-taxed. That's pre-taxed money. So you're really only going to paying about $35, but you're actually putting in 50. And if they're going to match that, that's another $50. The company is going to match that. That's free money that they're going to give you, which equals $100. Every time you get paid that $1,000, that $100 is going towards your stock. So that's about $65 of free money plus your $35. That's free money from your company, and money you don't have to pay taxes on. That also lowers your tax bracket, which means more money in your pocket, and a bigger income tax. When you get ready to file your taxes, you get more money because you're getting taxed on a lower tax bracket. So you definitely want to get into the 401k. Definitely want to do that. I've been doing it for years, and I'll never stop. And if you need money, say for instance you need, you're trying to buy a house, you can borrow off of your 401k. You can borrow money. Say you need 10,000, you got 10,000 in there. Say you need some of that to put on a house. You can borrow some and pay yourself back into your own account in the stock market. For school, if you need it for school, you can borrow it again. Say you lose your job, you can do a hardship and you get money out of your 401k. I mean, those are extreme cases because you're gonna have to pay taxes on it, on your income. But it's there, it's available in hard times. But if your company allows you to be able to purchase stock in the 401k, get in it. Any questions on that? Okay, back to you, Sheri.
I didn't have anything else, but I totally agree with you with the 401k. I loved mine when I had it. Good. I mean, I liked it when I looked at it too, because the company that I worked for basically doubled what I had put in.
Yeah, yeah. So, and like I said, it's free money. I mean, that's
It
money they're
is.
going to give you participating. Now, there's no reason in the world that you would want to pass that up.
And that would be one of the first questions that I would ask when applying for a job. Like, do you offer 401k?
Right. Do you offer 401k? And then a lot of times they'll say yes, and then a lot of times most companies do have a matching program, and they will match a certain percentage that you put in. Now, I've been putting in, they say 5%. That's the minimum that I would do, but I'll put in 10%, and they'll still match the 5. So, you know, you're still making money. You're still making money all throughout the year. Any questions? Boy, that's a lot of information. So I really appreciate you distilling us that information of Sheri. That's awesome. And a lot of stuff that I didn't know that I always wanted to know. A lot of the details, a lot of the things that I've learned I kind of learned on my own, and just by doing reading and things like that. But you kind of broke a lot of that stuff down, so I understand it a little bit better than I did before. And I've been doing it for years.
Well, when I started doing it, I didn't know much, but when I started working for my boss in Miami, one of the things that I had to do working as his personal assistant was manage his stock accounts. And I was like, I don't know what I'm doing. And so he finally was like, let me show you what you're doing. He said, so that you'll know. And I had to do it for him and his grandfather for the 2 years that I was down there. And it taught me a lot about it. He broke down terminology for me and everything. And when I came back home, I started talking to people and they were looking at me like I was talking foreign language. And I was like, so y'all don't know about the stock market? I was like, I mean, we know about it, but it's for white people. No, it's not. It's for anybody. And that's what I wanted everyone to see. So, you know, I said, let me start doing the free classes and stuff so that our people can see that they can make money too. You don't have to come from a wealthy family to be in the stock market. You can put $10 in there and grow that $10 to $2,000. Take that $2,000, reinvest, grow that to $10,000.
Absolutely correct. When I started at Packard, the stock was at $35, and now we're trading around $85, $90 a share. So
Packard they do.
What's that now?
Packard has a stock.
Yeah, PCAR.
Let me add that to my watch list.
Yeah, put it on there because they're posed to split soon. Because
oh, see, I love the ones that do the split.
So
I got it.
Put that on your watch list.
Yes, I am. I love any ones that they say are gonna split. I love them. SBE is another one that's about to do. SBE is about to do a merger. They're part of Tesla with the electrical cars and stuff.
Mm-hmm.
SBE is another one that is about to really make some moves.
All right, there's no other questions. I think we have our director still on, Rodney Johnson. Are you there? Have any comments?
Hey, I'm over here babysitting, not babysitting, but I got my little boy. But yeah, I just want to thank her for that. That was really enlightening. I got a lot from it. I'm sure I'm gonna be reaching out with some more questions, but you know, I use the Robinhood myself. Okay, so yeah, we just appreciate it.
No.
That's all I got, Vince. He's not gonna let.
We got our vice poll, Mark Gipp. You still there? Any comments?
I'm still here. Hey, I just want to tell Ms. Johnson, thank you for coming on and introducing us to the stock market. All while you were doing it, all I could just envision these young Kappa leaguers getting a group together and starting out with some of the money they make, because I know a lot of them have jobs after school, and teaching them how to invest in themselves versus the newest pair of Jordans that's coming out.
Right.
And how to get paid off the newest pair of Jordans that's coming out by investing in Nike.
Exactly.
So I think this is a very vital piece of information, and it's one of those things that change the way you think. One of my mentors told me that, let me see if I can get this right. Information without implementation is professional. I can never remember that word that he told me. But in other words, now that we have this information, if we don't do anything with it, it was just a wasted hour and 20 minutes. So I want to encourage the Kappa leaguers to get among themselves and see who all are interested, and form a group of investors and really put this information into action. And I myself will be contacting you, Ms. Johnson, because I want to get on the team that you all have so I can learn more and become more knowledgeable about the investments that I need to be investing in. Like I say, I'm doing it on Robinhood with a limited amount of knowledge.
Right.
But with the information that Robinhood gives me, I'm able to make decisions. And I just started with $100.
Right.
When that Apple stock split, I think it was like 400 and something, and I ended up buying a share, something like that. But I bought it when it split, just because of common sense. It's
Right.
Apple. So thank you. Hey, Brother Davis, good job. Keep up the good work, Brother Davis.
Appreciate it. So again, thanks for those comments. Again, we thank you again for taking that time out of your busy schedule and instilling this information on the stock market and just financial stability. So we thank you for
You're
that.
welcome.
So on behalf of Columbus Alumni, Kappa Fraternity, and the Golden Triangle Area Kappa League, we thank you. And as we will be sending you a token of our appreciation for taking this time out to be with us. So again, we thank you.
You're welcome. Anytime.
All right, with that, we're going to say, you have any parting words? And then we're going to say goodnight.
I don't have anything. Thank you all for having me. I actually got to jump on another Zoom call.
So thank you very much. So everybody have a good night and thanks for calling in.
Thank you.